What's happening, guys? And welcome back to another Sunday Scan. We have a terrific episode coming up for you all, and we are going to be joined by a real market wizard, officially someone who's going to be added to those books. So we are joined by Phil Goedeker today. He's been an incredible trader for over 20 years, and he's going to share what's on his watch list for the upcoming week. He'll talk about some setups that have been working well, how he's viewing the market, and a lot more. So make sure that you like, share, and subscribe so that we can bring you more great content like this on Sunday Scan. A few items before we get into the episode with Phil is that a reminder that we have a Traders for a Cause event in San Diego coming up on July 17th. So make sure if you want to attend to grab some tickets for that. And then a couple other things before we get into the episode with Phil. I will just give the disclaimer now that neither of us are financial advisors, and these are not buy or sell recommendations. Everything that we're going to talk about is for educational and informational purposes only. Now let's get to the episode with Phil. All right, we are very happy to have the legendary Phil Goedeker with us on Sunday Scan for the first time. And Phil, you've kept a lower profile for the last couple of years. You're an immensely successful trader, and I just found out that, and this is breaking news to everyone, you are officially a market wizard now, and you will be featured in the new Market Wizards book coming out. So welcome to Sunday Scan. How does that feel to be a market wizard and have that process unfold?
Yeah, Chris, no, super happy to be here with you guys. I always love speaking to you. I always love speaking to, the audience, Investors Underground. I've been, going to the Traders for a Cause for years now, spoken at several. So I'm super, happy and excited to be here. As far as the Market Wizard stuff, yeah, that I have not, announced that yet, but that is, official. I talked to Jack, talked to George, got my chapter done. It turned out, I was super, super happy with how it turned out. Those are two great, amazing guys, really good, just down to earth people. And I'm excited for that. They tweeted out that they had a spot for, one or two people left, and I almost didn't even do it. I, almost didn't fill out the application. I thought, number one, what are the odds? It's probably, slim to none, but I did. I filled it out. Told my story, and they were happy with it, impressed with it, and we moved forward. And unfortunately, it takes a year for that to come out, so it'll be out in June 2026. But that's exciting. I'm excited to see the book, see who else is in there, and read about everybody's story and background, and see. So I'm hoping people like it.
Yeah, absolutely. And I can't wait to read all about it. And, that's just a huge accomplishment. And I think a testament to, not just quick success, but you've been in the market for, 15, 20 years. You've been doing this a long time. And so to be able to do it at a very high level for that period of time, you had some recent tweets that really caught my eye and that kind of encompass this idea of when you approach the market, you said that you're not focused on trying to make the most money every single day. What you're focused on is being able to preserve your capital, basically find good setups, and really make this last. So could you just talk about a little bit of that philosophy that's helped you, your success over time?
Yeah, no. So I have traded now for 20 years, and I've been profitable for 19 out of the 20 years. I've had 1 year, and I think it's year 3 or year 4 is a very small loss. But, like I said, I've been profitable 19 years. The last probably 12 or 13 years have all been in the 7 figures. I've had a couple 8-figure years in there. And, the first few years of trading, even though I was making good money, you think you know so much, right? You think you're so smart and you have this figured out. And by year 10, year 15, year 20, you realize how little you knew back then and how your, knowledge just compounds over the years. And, the things that I have really learned is that preservation of capital and, cutting your losses, minimizing your losses is just by far the most important rules to being a long-lasting trader in the market. A trader that can withstand, do well in bull markets, do well in bear markets, do well in just flat markets. And, I have seen so many traders over the years that can make money. They can make 7 figures, but in a bear market, they, lose 7 figures and they give so much of it back. Or, these black swan events that can jump out of nowhere, which, that's why they're black swan events. Nobody expects them, but, wipe them out. And, it's something I talked about in the Market Wizards interview, but how I go into most days, and it can be right or wrong. Some traders might view this as wrong, but I go into a lot of days and I I don't know if I necessarily want to say I fear losing money or I'm scared to lose money, but I have the thought of losses or the thought of losing money really at the forefront of my mind. And, early in my career, I used to always be concerned about when is the next big win going to happen? When is it going to happen? This week was slow or last week was slow, and I haven't made a lot of money lately. And, the longer I've been in the market, the more I realize that winning trades, no matter what your style is, for an A-plus setup is going to vary for all of us depending on what our style is, but those setups are always going to happen. They're just always going to happen. We might have to be patient and wait a few weeks, maybe a month, maybe whatever that is, but the winning trades will always be there. They will always happen. We always find the winning setups. But what do we do in the meantime? What do we do on a slow day or a slow 3 days, a slow week, a slow 2 weeks? And I see so many traders, again, me included, that place boredom trades. And, for the most part, those are trades you probably are not going to be successful. And they probably, you're probably going to have a very low rate of success and most likely lose money. And, I think traders can get complacent as well, where, if we haven't seen an A-plus setup in a while, or maybe we haven't made a lot of money on an A-plus setup in a while, we can use, incorrect position sizing or bet too big on a setup that isn't appropriate. And we take a much bigger loss than what we, had thought or planned. And the thing about taking big losses is, it's not just the financial part of a loss that hurts, right? I mean, obviously, let's say we have a $100,000 account and our max loss at any given time is 5,000. We say, I'm never going to lose more than 5,000. I can't lose more than 5% of my account. But let's say one day you lose 25% of your account. Okay. So you lost 25,000. That financial loss hurt. I mean, it stings, right? You just lost 25% of your account in a trade, but it's not just the financial part. Is what does that do to you mentally? And I think the mental part is actually maybe worse than the financial part, because the next day you're going to say, man, I've got to get back. I've got to get back to 80,000 or 85,000. And, by the end of the week, I need to be at 90 or 95. And that takes you into, that screws with your mind, right? It plays with your mind and it tricks you into doing things that you normally wouldn't do. And I've seen a lot of traders who have just taken that, that one loss that's maybe, 10 or 20% bigger than what they wanted. And if they would have gone back to just following their strict rules at that point, they'd be okay. But when you take that loss, it does things to your brain and your mind, and you start trading in ways that are different and inconsistent with your pattern. So that's why I say, for me, when I wake up most days, or, when I place trades, I'm always thinking about kind of the worst possible outcome. What's the most I could lose here? What's the worst outcome that could happen? And I really do. I fear losses. I fear losses. I fear that blow up trade. Because, we've all heard the stories of the blow up trade. Once that happens, how do you come back from it? What do you do to come back? So that's the most devastating part to any trader, is that blow up trade, that blow up loss. So I think having that in your mind is important to just longevity as a trader. If there's one thing that's helped me stay in this game for 20 years, it's minimizing losses. It's not all these gains. The gains are great, but the gains will be there. But it's minimizing losses, cutting losses, eliminating losses, and positioning yourself to stay safe in a black swan event.
100%. That's such a powerful concept of basically protecting that mental capital as well. And I've observed it throughout my entire career that people make the best decisions from a position of strength, and you make really poor decisions from a position of weakness or desperation. And I see that a lot, especially with so many quote unquote black swans that we see in the market, with the crazy low floats that do stuff, breaking news trades or options trades or things like that. And depending on what strategy people have, some people, especially on the short side, they'll try to martingale, or basically just double down. And if they have a large account, they can usually get away with a lot, but eventually it'll catch up with you. And if you're not thinking about that worst case scenario, it doesn't matter how much someone has made. If you're not controlling risk in that way, then it can all go back. And I see that on Twitter all the time.
it can just go back so fast. And that's the thing. And so much of trading is mental. And I think that's what a lot of people don't understand is I think once you learn the concepts and once you learn the chart patterns and once you have studied enough charts and patterns and history, a lot of it's the same, but a lot of it is in your mind. And I think getting the mental game down is so important. And for me, even when I started trading the first 3 years, 5 years that I was making around $500,000 a year, that's a lot of money. But I always feared that loss. And what that loss would have done to me was force me to go have a real job, a real job somewhere else. So even in those early years when I wasn't making seven figures, but I was making, well, way more money than what I needed to survive or pay my bills, I was still fearing that if this doesn't work and I can't make money consistently, what is the alternative? The alternative is, well, now you're 23, 24, 25 years old. You got to go get a real job if this doesn't work. So I have always had kind of that fear of not making it or the fear of losses, the fear of that black swan or blow up trade in the back of my mind. And that's one thing that has definitely helped me be successful over the years. Now, again, I don't go into my computer every day, super nervous, super scared or anything like that. But that is the thought of losing money, the thought of the losing trade is something I have in the back of my mind. And I've always had it. And at times it's kept me up at night. If I, sometimes even, when I'm trading options, if I have too much size overnight, in like a GameStop situation years ago, or, whatever the situation might be, I've had nights where I was up literally like all night long. And you learn from that. You say, I'm not going to do that again. I don't want to go through that stress. I don't want to go through that anxiety. I'm never going to put my account in that sort of a situation or position again. And, the other part of that as well that, I think successful traders need to focus on, this is kind of taking the subject somewhere else, but is, having a backup plan, right? What is your backup plan? Where do you put your profits? What do you do with your money? When you first start out trading, you're going to take your account, because most everybody, when they first start out, their accounts are small, right? They're going to compound it for whatever length of time that is, 6 months, 1 year, 2 years. But after you get your account to a certain level, and it could be whatever, it could be 100,000, 500,000, $1 million, whatever. You say, okay, my account is at a certain level. I don't need to grow my account anymore, but I want to do something with my profits, right? And I always had that thought in my mind at an early age as well, where I loved real estate. I loved, just investing, mutual funds, ETFs, treasuries, bonds, cash, CDs. It doesn't really matter. But, traders, I think it's so important to, even when they're young, get your account up to an acceptable level. And then for me, I've done it every single month for 20 years. At the end of the month, I wire out ACH out every single month. Sometimes I do it a couple times a month, depending on, how profitable my month is, but I wire out, transfer that cash out, put it somewhere else, put it into passive income, put it into real estate, put it into bonds, mutual funds. It doesn't matter where you put it, but put it somewhere else, transfer it somewhere else. And that, again, helps me kind of sleep better at night. It also helps me come into the market each day knowing that I'm not forced to make money, right? I'm not forced to sit down and push buttons if the setups aren't there. I know in the back of my mind, I have a backup. I've got this set aside. I've got passive income, and I don't need to make money today. I don't need to make money tomorrow, and that's a really important concept as a day trader, because again, as day traders, we're all tuned, and again, me included, I'm not setting myself aside that we have to day trade, right? We have to trade all day, every day. And that's not the case. You don't have to trade every day. We can trade, once a week. We can trade a few times a month. If we do feel forced to trade every single day, I'd highly recommend, even the veterans, even like somebody like myself, if I trade every single day, usually it's pretty small size on a lot of things, because I know this is not an A+ setup. I know the reward is not going to be there, right? So why would I put the risk there? It's just going to be very small risk, very small reward. So again, having that backup plan, that backup investment or cash somewhere else has really helped me come into the market every single day with a free and clear mind, where I don't feel forced to make money. I don't feel forced to recoup a loss, right? Because, hopefully, I have losses, losing, I don't want to get into that tailspin of losing money. And the more free and clear you can come into the trading day with your mind, I think the better off and more profitable you're going to be.
100%. I remember when we have spoken previously, that was something that stuck out to me, was that, not trying to squeeze A plus profits out of a C plus setup. It just doesn't work. And I remember that you said that, early on, that's something that you kind of struggled with. It's you treated everything the same. And what you started to do was size down a lot on the B or the C setups, and then,
Yes.
really save your risk for the A setup. So that I
Yes.
always remember that after that conversation.
Yeah, no, and that's that's something I talked about in this Market Wizards interview. My senior year of college, I had $5,000 in August of 2005. When I graduated college, May 2006, about 9 months later, that account was at $1 million. So it went from 5,000 to $1 million in 9 months. I was all in on every single trade, every single time. Now I got extremely lucky. I had a fantastic market, but I had no rules, no risk management, no thoughts of losing. I didn't think that was going to ever happen, right? And then a few months later, 3 months later, that $1 million account went down to 500,000, right? And I immediately wired 400,000 in the bank, started trading with 100K, and I knew right then and there, risk management is going to be the most important rule out there, because I had just lost $500,000 in 3 months, and I thought, well, another 30, 60 days at this, I could be wiped out. So that was such an important rule to learn, right then and there.
Definitely. And then, on the topic of risk management and everything too, we've seen some recent moves, especially like we're going to touch on Circle a little bit. And you had some tweets about, early on with Circle and with CoreWeave saying, don't get overzealous shorting these IPOs. They have unique structures. And a lot of people who are used to maybe just doubling down or, trying to force a short on something that's just, it's not the right structure for it to, happen until you have, a big capitulation after it's up enough, after it has enough volume, and then you can actually start to get, a proper setup. Could you talk about your mindset from kind of, being hands off until those really set up? And then do you still, come to the market on the short side to participate in some of those when they're ready? Because I know that you've pivoted a lot from the short side to more the long side now.
Yeah. Well, getting back to your IPOs, that CoreWeave and Circle, from a technical basis, you look at a chart and you just say, well, this is vertical. I mean, it has to go down. It has to sell off. But you don't know. I mean, there's so many things you don't know. What is the float? Usually those are extremely tightly held. Usually there's some euphoria in the market out there, some even mania out there that, buyers are just going to bid this up. And I learned, again, everything you learn is from experience, right? So I can tweak these things out and people see it and probably just say, what does he know? I'm going to still short CoreWeave anyway, or Circle. And Circle did offer a good short this past week. It went, more parabolic than CoreWeave did. But, these IPOs, I learned the hard way with Tilray, and I believe Tilray was back in 2018, 2019, where you thought, okay, this stock is up so high it can't go any higher. Well, guess what? It did, and it can, and you take a big loss, and you just you learn from that. That IPOs, in my opinion, are certainly not worth fighting. They're worth just joining the trend. I mean, joining the trend is much easier than fighting the trend, and just learn that from experience. There's no doubt. But Circle went a lot more vertical, a lot more parabolic, in a fast manner than CoreWeave did. It did offer a nice short this past week. It didn't offer a short setup that, in my eyes, was perfect. We've been in Florida for the last few weeks anyway, so I did not mess with it. The equity side, I did trade options on it. I did make low six figures on the options. I can do that more with more free time and less screen time than I would have to looking at the equity all day. So I didn't trade the equity all day, but Circle did offer a nice short. But these are they're IPOs are just tricky. They're their own animal, and you don't know. There's just a lot of information out there with IPOs that you just don't know about. And unfortunately, a lot of times when I go to short a stock, I want to look at not just the daily chart or the weekly chart, the monthly chart, but I look at a yearly chart. I want to look at even a 5-year history to see how this is traded. I want to look at a 10-year history and see how something's traded. So an IPO obviously is not going to offer any history whatsoever. And I just know through experience fighting those can be just very difficult and very stressful. They can provide profits, there's no doubt, But at the end of the day, you have to think about, is it worth the stress and the time that you spend fighting these versus looking at other tickers out there that might have offered, easier setups or easier profits?
100%. And I know that something that we wanted to touch on was, your scanning process. So when you are
Yeah,
looking at, out of all, if you're looking at the ecosystem of the market, how do you know what to prioritize when there's so many things moving, especially in a market like this? So, could
yeah,
you describe your scanning process and how you really dial in and, become focused? Because I know that you've scaled down the amount of time that you spend,
yeah,
actually at the market down dramatically. So that takes a lot
yeah.
of concentration for focusing on the right thing. So,
So scanning to me is something that is, maybe the most important. Well, not maybe the most important. It's probably the most important part of preparation for any trader is scanning. When the book Momo Traders came out, maybe 10 or so years ago, it was written by Brady Dahl and Nate. Nate was in there. My chapter, I believe, if I remember correctly, was called The Scanner. I mean, I constantly scan the market, constantly scan for setup. So, for me, historically, what it's been is every single night going through setups, going through the biggest winners of today, going through the biggest winners on a weekly basis, going through the biggest winners on a monthly basis. Now, FinViz is such a great tool. FinViz has cut my scanning time down dramatically because you can put in all these parameters and you can see 20 to 30 charts right on one screen, right? So I use FinViz to screen, but I look at, like I said, the biggest daily winners, weekly winners, monthly winners. And then I want to pick out, my top few and then read some, get into the news, see exactly what they're doing, what their filings are, what is going on, do some background information. Now, weekend scans are, just as important. And really weekend scans are where I do, more research, trying to maybe fine tune other methods or just tweak what you're doing, see if there's any other, trades that you can place that maybe don't fit into your A plus parameters, but are there any B setups out there where you say, hey, the market's been a little slow, there's nothing A plus, but what can I do to still make some money this week? So, weekend scans are extremely important. If you could spend a couple hours or an hour Saturday, an hour Sunday, whatever that time is, to really do an in-depth scan of the market. And then pre-market scan to see the gap scanner, what's moving, what's moving today, what are the news headlines, what is the president tweeting, what's going on in, the bond market, what's going on in the oil market, what's going on, domestically, right now, Iran, Israel. So just to get an overall feeling of the market in general, plus, for me, it's pretty much the biggest pre-market winners of the day, seeing what's gapping pre-market and why. But, I'm even amazed today at how many traders that are successful will maybe get to their screens, 5 minutes to maybe 10 minutes before the open. And I'm like, how do you prepare? Like, how do you know what to trade if you get there 5 or 10 minutes before the open? I mean, that's certainly not enough time. Maybe they're faster learners than I am. I don't know, but certainly doesn't seem like enough time to get a good gauge of, the overall market and get 3 to 4 good stocks and do some history on them. So the more time you can scan, the more successful you're going to be. I feel like there's just there's no other way around that. And it's just homework, right? It's just making yourself dedicated, motivated to saying, this is what I want to do. This is what I need to do. This is my job. I mean, I've got to put in that time. I've got to put in time every single night. Got to put in time every single morning. Got to put in some time on the weekends, and you're going to see it compound. I mean, you just are. You're going to see the results. It's like anything else. You work out, you hit the gym. Give it a few months, you're going to see results. Same thing with scanning. You put in the hours, you put in time, it's going to pay off for you.
100%. And it really just getting that market context. So, knowing what headlines have been, happening, what is moving markets, what is moving particular stocks. And then within that, knowing what is basically setting up for maybe a reversion at some point, what is setting up for a new trend that can continue for a long time. And one of the things that you've been focusing on that we chatted about before we started rolling was you've been taking a lot of these, trending stocks in, with good solid themes that have been breaking out with volume, and some things that have been running hard recently, like ASTS or Coinbase. So could you talk a little bit about, what you're looking for when you see a chart like Coinbase? Walk us through what you're spotting, and then how you're thinking about it.
Sure. Yeah. So something that, last couple of years is I don't want to spend all day in front of my computer, and I don't want to short small caps. I don't want to fight the algos. I don't want to, look for borrows. I don't want to, I just kind of got a little bit burnt out in there, and I trade options full time, is I've been looking to get more into, longing stocks, right? Buying stocks, swing trading, a little less maintenance, a little less time in front of the screens. And one way, yeah, is just by, again, sticking with the trend. What is working in the market, looking at that trend. And one thing that has always worked are high volume breakouts, right? A big move to the upside on big volume. And you look at this Coinbase, so that is right at June 17th, 18th, something like that, pops up on huge volume up to right under 300, consolidates a couple days, and then bam, up another almost 20% in the following few days after that. That is a great setup. ASTS is another good setup from June. I believe that took off right in early June. I think that was June, was that 3rd or 4th? Broke out. I mean, you can just see that huge volume bar to the upside right at $28. Consolidated, really not much for a day or so at 32, and then bam, all the way up to $50. Another one that I can think of is QBTS. I think QBTS was back in May, and I forgot what the headline was with QBTS. I believe, I could be wrong here. It's been a couple months, but I believe Saudi Arabia or somebody maybe put a big investment into QBTS. And again, you can think what you want about the company. I'm not really talking about, the fundamentals in depth here. I know some of these are in very early stages, so I'm not, getting behind the fundamentals whatsoever, but I'm getting behind the technicals. And you look at that breakout on May 8th, on huge volume up to $10, $11 a share, consolidates for a few days, but then breaks out again May 19th, 20th, $11, $12, and you go all the way up to $19 a couple days later. So these are setups that I am starting to scan more of, and a couple of reasons for that. Number one, I don't want to fight, the small cap shorting world anymore. Like I said, I don't want to look for borrows. I don't want to pay for borrows. I feel like these offer a good way to, generate income, get my fill of the market, because again, I'm still addicted to the markets. I want to trade the markets every day. I think about the markets every day, and they're working. I mean, now again, you're going to have losing setups in there. You're going to have to put a stop loss up there, 5% below your entry, 7% below your entry, whatever that might be. But right now we're in a bull market, right? I mean, early April, things were completely different. We were in the tariff tantrum and whatever you want to call it. And since then, the market has rocketed back. We're right at all-time highs. No matter really what the news flow is, the market is holding strong. And when that happens, it's tough to fight the trend. And in a uptrending market, I believe the statistics are like 3 out of 4 stocks will follow that trend, right? So in an uptrending market, everybody looks smart, right? You can just, for the most part, sometimes buy, close your eyes, throw darts and buy. But again, if you look at what's really working and high volume stocks with good themes, they're going to accelerate the gains a lot more than just, the average stock. So something that's certainly something I've been looking at is some of those high volume breakouts. Coinbase this past week is a perfect example. ASTS back in June is an early example. I believe AEYE is another example, something that's ran up pretty good here in the month of May and June, and that's actually getting, pretty extended right now. I'm sorry, AEVA. AEVA was that, Tim. I got that ticker confused there. But AEVA is another one, if you want to pull that one up, and you look at that move, and that's just been, an unbelievable move. That had a massive high volume breakout back in early March, consolidated for about 30 days back in early May. Took off again, and now we're up to $36 a share. I'm absolutely not recommending to buy that up here. It's actually, I think, extremely extended. And if it continues to run another day or two, I will be, actually looking at that, on the short basis. But that kind of gives you a feel or an idea of some of the ideas that I'm looking at, in a bull market to, on the long side.
100%. And I think it's just really worthwhile, talking about, the process of that, scanning the market, being aware of what kind of, market regime that we're in. We're in a bullish market. Money is flowing in once you got more certainty after some of the tariff stuff. And then it's basically, okay, what themes are in play? What themes are running? crypto's been running. You have the aerospace stuff that's been running. A couple other things like ASTS. You had quantum that was running. That was the QBTS. And so basically being aware that we're in a bullish market, then what are the themes? And then waiting for those catalysts or the things to really set them off. A catalyst, and then the volume basically signaling that demand is coming in. People are buying that. That volume is not, shorts. It's not other things. It's from demand coming in, and then basically riding that trend as long as it's higher highs, higher lows until it maybe eventually starts to really speed up, and then the risk reward is not there anymore.
Right. And that really shows you, that's the great thing about the stock market, or the so many ways to make money, right? There's so many ways to skin a cat. And I've talked to so many people that say, or that even are in, St. Louis region, could I stop by your house, or could you show me what you do, or could we Zoom and you can show me what you do, how you trade? And I say, I have no problem doing that. But again, the way I make money doesn't mean that has to be the way you make money. I mean, we can all look at a chart and I can say, for last 18 years, I'm like, I'm going to short that stock, but I have to wait. Okay, now I think it's turning. Let me jump on the short side, and I still want to do that today. If I see an A+ setup, I still want to do that. But again, after doing that so long, I kind of now like to, look at the other way. Look at the other way of the chart, especially in a bull market. In a bull market that, like you said, just a minute ago, that just has almost endless bidders. Right? It doesn't matter. Trump can still tweet something that, no trade deal with Canada or whatever it was that came out Friday. The market dipped. We ripped right back. So when you get a market like that things are going up, I kind of like to look at the other side and try to play the long game a little bit. Why not? Because, again, in the market, there's just infinite ways to make money, infinite ways to trade. And it's all about what works for you. What is the method that works for you? What how much risk can you take on as a trader? How do you handle, your time frame? How do you handle your risk? How do you handle your money management? How do you handle sleeping at night? How do you handle, taking positions overnight? So, every trader needs to figure that out in their own way. The best way they could be to become successful and go from there.
100%. That's really what, setups are all about. Identifying, how can a stock move? Can it move with a good amount of range? And then is there a way to participate in that in a safe way where you can control your risk? And if you're right, you make multiples of your risk, and you just do that time after time and avoid any, massive blowups along the way. And that's really the process of just compounding and, doing that. So,
Yes.
Do you have any, more general market thoughts about kind of the environment that we're in? I know that we touched on it a little bit, but markets right at all-time high. We're rolling into the end of the 90-day tariff extension. So maybe coming out with that. Do you have any kind of general thoughts, or do you think that as long as the action is confirming the trend, just focus on that until we get some different kind of action?
Yeah, well, that's what you said is right. I mean, you have to focus on the market action. The market action is all that matters, right? So any other news is just really, it's noise, right? So in early April, let's go back a little bit. So 2023 market went up, I believe, about 25%. 2024 market went up about the same 25%. Historically, market goes up 10% a year. So historically, we were, a little overbought coming into 2025. We had a Trump bump as well after the election, and the markets were a little extended. And I think they were expecting Trump to be extremely market friendly and whatnot. And then in late March, early April, we learned very quickly, oh, wow, he's serious. These tariffs, he said, are they going to be on permanently? And the market went down, 13% or so in 3 days, around 20% off the highs. And his rhetoric changed, and we have zoomed straight back to the highs. And lately, last week, again, I think it came out Friday, said the trade deal with Canada is off, and the market, brushed it aside, didn't really care. And I think that's also because it seems like, it sounds like the rhetoric is this deadline is not a set in stone date, which means I think Trump knows right now it's in his benefit to, not crash the markets. There really is no benefit. I think originally in early April, there was talk of, we could, bring the 10-year down, which never really happened. So there's no real benefit there. So I think at the end of the day, you got to follow the price action of the market. And what we've seen is that we're in a big bull market uptrend. And historically, I look at seasonality. Seasonality says that July is, usually a pretty strong month. But after that, August, September, October, we can see some chop. We can definitely see some volatility increase. So depending on what the VIX is at in, late July, early August, if VIX is super, super, super low, you might look to, hedge a little bit or buy some VIX, buy some volatility or something along that nature. But, right now, I think with AI and the themes out there, it seems like we have a lot more buyers than sellers, and any sellers out there, we've got a lot of buyers on the sidelines that are ready to step in and put capital to work. So until that changes, I would stick with that theme.
100%. And Phil, we can't thank you enough for really coming on and just sharing all of this. And I think it's just immensely beneficial for people to see, how does a real, professional trader who's done this very successfully for a long time, how do they approach the market? You've talked about your scanning. You've talked about your, focus on risk management. Basically sticking with, simple, practical themes, looking, what kind of market environment are we in, finding the strong themes, finding breakouts, being able to control your risk and participate in that upside. So any kind of closing thoughts as we wrap up here?
Closing thoughts, I would say to anyone, beginning traders or maybe traders that haven't reached consistent profitability yet, is stick with it. Stick with it. And if you're motivated, dedicated, and you're willing to put in the time and effort, I think it's going to pay off. And again, this is getting back to the market wizards thing that, we talked about a little bit earlier, but I use the word addiction in that a lot. And I don't like that word. Addiction, usually has a very negative connotation that comes along with it. But, early in my career and still today, I have been addicted to the stock market. I just have, nobody forced me to do it. Nobody forced me to sit in front of my computer. And I've probably reviewed over 1 million charts in my lifetime. There's no doubt I've reviewed over 1 million charts in my lifetime, but I love it, right? I love to do it. I love to think about it. And I think anybody that puts their mind to it, can succeed and will succeed. But a lot of it is mindset. And, you can't expect it to be given to you, right? I mean, just if you're going to expect somebody to give it to you, then it's never going to work. You're going to fail. So you have to take it on your own. You have to learn it on your own. And, you just have to put forth the time and the effort. And that's all it takes. I mean, I have put in just thousands and thousands and thousands and thousands of hours doing it, especially early in my career when I was 18 years old, 19 years old, 20 years old, 21 years old. I mean, I just put in countless hours. And today I get to reap kind of the benefits of that, where I don't have to put in all that time. I can spend an hour in front of my screens, maybe 2 hours in front of my screens, and make, very good money. But that didn't come without, I don't know if I want to use the word hardship, but I mean, because I enjoyed doing it, but didn't come without thousands of hours, probably tens of thousands of hours of just studying, back testing, and research. And again, talk about back testing, the market's open every single day. So, it's so important to study these winners. Circle was a great thing we talked about earlier. Study Circle, study the intraday chart of that when it, on the moves up, the day Circle crashed or moved down in the afternoon, it was bidding at 245, 245, 245, 245. And once that broke, I think it went down like 25, $30 within an hour. And I think it's so important for traders to use that daily data of the market as a guide, right? Today's stocks will help guide us tomorrow, right? So the market, has so much information out there, almost sometimes maybe too much information, but there's so much information out there. So the information is out there for people to use as a guide. You just have to make yourself do it.
Well, that's great. Great points, great advice. And we really appreciate you, coming on to Sunday Scan, and we hope to have you back sometime. I hope that you enjoyed the rest of your trip and your travels and summer, and we'll see you in the market.
I've enjoyed it, Chris. I always enjoy speaking with you. I'd love to do it anytime. Just let me know when when I'm needed, and I'll be back.
Sounds great. Thank you so much, Phil. And congratulations again on becoming a market wizard officially.
Thanks, buddy. Have a good night.
You too. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.